Hi guys, welcome to another episode of The Aspiring Entrepreneur. I'm your host, Hamza Chowdhury. It is March 19th. It is Friday. Happy Friday. I hope you guys had a wonderful week, the Quad Witching Day. I will post a link below if you're interested to know what that is. But it was an interesting week. We were slightly, I think, down this week from where we started on Monday. And, it was an interesting week. You can see we're constantly bouncing off this 50-day. And I noticed that back here when we bounced off the 50-day, we validated and we came up and then we tested and then we failed here. But then we came back up with the hopes of the stimulus, and now you can see we've tested again. And so you can see the market's been very choppy. And what I'm starting to see as a trend in a lot of stocks is that they're gaining and they're going up, and then the next day they're giving back those gains. And we saw that with Tesla, we saw that with AI, we saw that with Spce, we saw that with a lot of stocks, right? So you'll see a stock go up and clearly identify support levels, and then it just fails the next day and gives right those levels back. And so it's been kind of choppy, a choppy market, again, just sort of up and then down for the week. So it wasn't that exciting. I'm finding that definitely the shorts are winning. I mentioned last week that I was actually short AI coming into Monday. Obviously I covered, and it ended up going from $90 at the start of the week down to as low as like 72 today. So it was a good long-term short. Obviously, I don't hold those positions that long. I mentioned to you guys I was long AI, and I've sort of switched biases. I still think it's a strong stock, and we'll get into that shortly. But overall, Apple and a lot of these stocks just, weren't that great. Again, we've identified some previous strong support levels. And I mentioned to you guys, and you guys may notice, especially for you guys who watch this channel frequently, that there's levels that I still keep red, and it's not because they're not necessarily support levels, it's because I haven't necessarily validated them as support levels. So if I constantly every day change support resistance from red to green, then constantly things are going to be broken, or I'm gonna have to change it frequently. And what I'd like to do personally is identify levels, but also see them be validated and hold. Okay, so like I mentioned at the start of this video, you're seeing stocks support and then the next day fail that same level, and so I don't want to just keep changing. So what I'd like to do, and I've consistently I haven't changed a single resistance support line this entire week. So everything you're seeing has been valid. So the green line, which has been valid at 120 for a few weeks now on Apple, and then of course our heavy play at 170.80. And so you can see today, where do we close? 120, guys, 119. So that's our level, and we can keep that as a support, okay? And even if it dips below, which it did slightly today, it doesn't mean it's still not a valid support because we closed right around it, okay? And so you can see clearly the 123 is given resistance. We had the 125, and then of course we had the 127.50. And so as Apple just sort of breaks these levels again, we're holding at what we call a dab play, a small portion play at 120, and of course with the heavy add at 117.80. And you guys can see clearly here what's happening, right? As the 200 days slowly moving back up into the 117.80, and so is the anchored VWAP. And so guys, the downside risk to Apple is really like, I said 114 back here a couple weeks ago, but now we're looking at 116, 115 to 116. And so as Apple trades sideways, you continue to see that potentially come up to like 117.80, which would be our ultimate go heavy. Personally, I did not trade Apple, I believe, at all this week, and so it's just it's just a stock that I watch every day, but I haven't traded it. Tesla, our dear friend Tesla, going back to what I was saying earlier, is you'll see these sort of gains, whether it's stimulus news or the Feds aren't raising interest news. And the next day that we have a gap down and a continuation, and so it gaps down, it doesn't even recover, and it just fails. And so it's interesting to see that you have this top here, what we call the 710, 715 level, and then we validated our 660, which is go heavy on Tesla as well, and then we bounce back above our 695, which validates that level, which I never converted to green, even though we had clear support here. But again, we broke down, guys. So until I'm really convinced, I'll change it to green. So we called it a heavy resistance still, and we just broke through it, okay? And so again, that's why I don't like to change these things every day. 695 continues to be a resistance for Tesla, and so you can see here we're even trading below the 660, and I'm not necessarily convinced that this doesn't mean it's not necessarily a support, although we did close below it. but we'll come and see Monday if we can completely rebound. And so Tesla's been trading sideways, and I really expected us to hold, especially at least the 660 and 690 level, so that we can get back up and try to get back up here to the, the 50-day, which still remains. You can see the Bollinger Band, the upper band here is intersecting the lower band. So you can see as we form this channel, guys, expect that Tesla is finally going to start creating this channel before we can get the next leg up. Okay, so again, massive bullish momentum. Okay, profit taking, sell off. And of course, we talked about, right, price reduction, 30-40% haircut, and now we're essentially consolidating sideways again. And then of course we should see a next leg up. And like I mentioned before, my price target for Tesla still remains $1,000. Definitely, I see that this year. And you can see, we've had some positive momentum, but we really, this engulfing candle was strong, and we had this breakout all the way up here to the 20-day, and then we've now traded below the 20-day, which indicates still some more bearish momentum. But I expect that the stock will rebound, and again, I expect us to trade this, but we have to hold, guys, above 695 in order for us to really get back up here to 775, which again would be the perfect 50-day entrance. So hopefully you guys are doing okay on that trade, and if you're stuck in Tesla, I'm back holding some shares that I bought. Again, I had plenty of opportunities to exit and I didn't, and so I'm actually back holding some. I did post a text pre-market when I saw Tesla trading here. I posted this on my Instagram that it was around 660 that I saw that it could trade to 620 to 625. And it just, again, based on just previous performance, I mentioned that, and we actually ended up hitting 624. So it was right on cue for that. Palantir, same thing, is, we've identified a strong resistance level here at 2750, and that remains resistance. And I had a support here at 2550, which you can see is now resistance here, and we completely failed. And so, overall, the market was weak. I think we flushed out a lot of people these last few weeks in Palantir. And I think that, again, we can definitely test, potentially this low here at 2250, which we've bounced a few times, and is the part of the bottom part of the Bollinger Band. But you can see we've created a channel now with the top part of the channel is trading under the 50-day. And so expect that within a few weeks we do have demo day, so there will definitely be some volatility and momentum heading into that, like there was here. And so with that said, I really expect us to get back over 2550 coming into Monday, and I really expect that Palantir will start definitely moving in the right direction. We do have the positive momentum, and the ATR has kind of gone down significantly. You can see it's about $2 average spread a day. But, again, guys, the buyers are in these trades. There's just a matter of when they start to blow this thing up like they did here. But they're in the trade, guys. I think it's no surprise that this thing's been beaten down all the way to 20 bucks. And so everyone who wants to be in this trade is in it. Clover, I actually thought it was a really strong stock. I mentioned to you guys that, our 815 is held now for a couple weeks. I mean, that's why it's a valid support. And although there's, definitely some top resistance here at 910, this double top here, I'm just waiting for that real resistance here at 925 that I expect us to hit next week. And the stock is doing really well. I mean, a lot of the stocks like Tesla and Apple, right, they've gone up and they've sort of lost their gains, but, we're really holding the middle eights really well. And today we actually got up to 880s. Okay, and so we're holding pretty well with Clover. It's just a slow mover. There isn't a whole lot of volume. You can see that the momentum has shifted positive the last few sessions. And so again, same thing. I expect us to get up here under the 50-day relatively soon, and we're starting to form a consolidation channel. And so, again, my game plan hasn't changed. I'm going to be right here selling right into the 1050s, and so I'm just holding on to shares. I added some as well, and so game plan is sell right into this push right here. And you can see that big volume spike here at the end, and so let's see it. But you can see that previous what we bounced off of was at 925, which is why I identified it. And I get it, 910 is been the top this week, but 925 is within reach. And then once we get to 925, then there'll be some bounce off of 10. And so it's just it's just gonna take some time, guys. It's a slow mover. It might take a couple weeks to get up there, but just trade according to your plan. Spce. It's been a fun stock, actually. It's been a lot of fun. I mentioned here that I could see this getting back to the 50 up to 37, 39 where we broke down, and we ended up breaking down again. We had this really good run up, and we had this breakdown. So I saw the breakdown, so I ended up getting rid of my shares. It was right here in the post market. Okay, so I ended up getting out of my shares here at the post market, knowing that one, we were overbought, but also just the market's been choppy, and sure enough, we've gapped down. And so I bought and I literally traded scalps. Remember guys, we have key levels here, and so the key level here was upwards in the 34, but I also had a buy here close to 32, and so I was buying, selling. It was my biggest winner for Thursday, and it was a good trade. And today, first thing guys, you know, we're getting up down here 31, testing the highs from this pre-market on Wednesday. And so if you're able to sort of get into these levels that you've seen previous dips, and you can buy, you know, imagine from 31 all the way up to 33, and that's a $2 winner just for a single day trade. And even if you held on to half, you were up a buck instantly within, you know, 15 minutes. And so it was a great trade. I didn't trade it today. Just yesterday was my biggest winner, but today I just sort of watched it. And a lot of times guys, if you know, you don't have to trade every day, you can just watch, you can study, you can learn. And that's what I recommend, right? Is that as these stocks are making sort of higher highs and higher lows, once they start to retrace some of that momentum, right, you know that they're going to come back to certain levels that they've hit. Okay, so you can see several bounces here in the 32 area right here, and then you can see the risk down here, which is 31. Okay, and so try to go back when you look at what levels did the stock bounce in, and what levels did it fail, and what levels did it have trouble. So here clearly the 36 level is where, you know, Spce failed, but look, it's at $33. Okay, so it's only 10% from where it was earlier in the week. And so same thing, I expect that, you know, we'll definitely get to the 20-day, which is at around 35, but definitely here to the 50-day. There's a lot of momentum for this stock, and as you can see, today was the first day that we had some positive momentum. Okay, and the last stock, what I think is the most sort of disappointing stock in my opinion would be the AI. Like I mentioned to you guys here, on this day I was short coming into Monday, and covered my position, and it was decent. But you know, again, this personally just does not make sense to me, which is you have, you know, strong volume and you hold these key levels, and then when you count on them to support and bounce, especially when you consolidated very well here at the 90-89 level, everything just fails in the stock, and it just completely faded the entire week, right? There is no recovery or retest of this level. It just literally failed. So we're not talking about, you know, $2-3 bucks. We're talking about from $90 all the way down to 72. And so it's been a really interesting play because now we're making all-time lows, right? And so I mentioned to you guys here that this is a solid consolidation range, and then we just started to fade off of that. And so it's kind of interesting. It's definitely something that's not common. You can see we're completely oversold, and we have been for some time, but you can also see that we're waiting for that positive momentum, so we can see that the MACD line cross over the signal line. And then of course the 50-day guys is all the way up at 125. I mean, I was like, that's 125. You're $50 underneath the 50-day. And I get it, you know, there was low volume days here, and you know, the stock went from, you know, 90 all the way up to like 180, 200 bucks. But to be trading at like less than half of that of the recent highs as of a month ago, I just think it's kind of been overdone. And so just hold on to your shares. I went pretty heavy yesterday. I've been buying and selling it. I've been scalping it too. It's been solid. I was solid up yesterday, but you know, this is where I got stuck, is just waiting for that retrace, waiting for that retest up in here, and instead you just get this massive failure. And so I started to bag hold here, and then of course a massive drop today didn't help. But you know, knowing that we're getting AI, which was, you know, up here, started at like a $90 stock, I'm getting it at like, you know, 78. I'm totally fine with it, and so I'm gonna hold on. And I went pretty heavy, and so anything to me in the 70s and low 70s is a steal. But I'll be holding on, at least waiting to get back up here to the 20-day, which again, I mentioned here originally, I was thinking this thing would get potentially up to 100, and I still think it will, but we just have overall weakness in the market, so that's not going to help. All right, so with that said, guys, I will update on Sunday, and we'll have some update tickers. If that, you know, if this video was helpful for you guys, definitely always appreciate hitting that like button. It definitely keeps me very motivated to help and lets me know that I'm helping you guys. If there's any questions or comments that you have, feel free to post them on the channel. And as always, guys, have a great weekend. Definitely take some time off and, you know, reset and take a breather. All right, guys, take care. Bye-bye.